Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we will help you understand the closing action of the markets today, how the day has really panned out in trade, the key insights that you should be looking at picking up, and how should be you approaching your own investments as far as equities are concerned. We'll also be speaking to an expert, but first up, a quick check of how the markets are trading at this point, especially the benchmarks, the Sensex and the Nifty. You do see that the markets have been seeing a downward day or a weak sentiment right from the word go today. 17,607, there's a slight recovery from the lowest point of the day, but still 1.5% downtick that you can see for the markets today. 287 points gone there for the Nifty. The Sensex trading below that 60,000 mark, 59,338 and 860 points downward. We had seen about 1150 odd points in an intraday level kind of a loss, but they have slightly pulled back from that lowest point of the day. 1.4% downtick for the Sensex as well. But it is a day when we have been seeing a broad-based sell-off. Talk about the broader markets, the mid and the small cap 100 indices, and you will see a similar or a slightly weaker momentum right there as well. As far as the mid cap 100 index is concerned, it's down by 1.5%. The small caps are actually taking a sharper beating, 1.9% down for that one too. But India VIX, that's the index that you need to watch out for. Very sharp upside, 17.9% in the intraday session today. It's above that 17.2 mark right now. If you do see the market breadth, 37 declines to 13 advances. The market breadth clearly favoring the declines at this point in time. In terms of the sectors, you do see a mixed reaction. Some of the sectors, in fact, recovering from the lowest point of the day. The index that's been leading from the downward momentum today, or in fact if you see as the biggest laggard, is the PSU banks. That's down by 5.3%, followed by sharp declines coming in on the metals pack, 4.6% down for that one too. 2.5% cut for the financial services, the private banks, the realty pack as well. Slight losses coming in on the IT pack too. The Nifty bank definitely a big loser today. The index with the heaviest weightage as far as the Nifty is concerned, 3.16% on the downward side. But there are few sectors that are still holding up despite this overall subdued momentum that you're seeing in the markets. Autos, for example, are leading from the front. There's a 1% uptick that you can see on the Nifty auto today. Apart from this, the FMCG stocks are doing well, 0.5% up, and similar gains you can actually spot on the pharma names as well, with the pharma index up by 0.6% in trade. Let's look at the top losers. For example, the stocks that are actually contributing to the sharp fall on the index. Of course, it's the Adani Group of stocks, and which has been mired in controversy after that Hindenburg report that has come about. Now, there's also news that SEBI is looking to increase the scrutiny of the Adani Group deals. Post this report has actually highlighted some of the concerning points on the Adani Group. So you do have Adani Ports, Adani Enterprises down by 15-20% today. Apart from this, from the banking space, it's PSU Bank major, SBI that's down by over 5.7%, Axis Bank down by 5%, BPCL seeing a cut of 4% too. On the upside, you do have those stocks that are actually providing momentum to the three sectors that we talked about. Bajaj Auto, Tata Motors, for example, is pushing the overall Nifty Auto Index today, 5 to 6.5% kind of a move on the upside. From the FMCG basket, you have ITC among the top Nifty 50 gainers, up 2% as well. Dr. Reddy's, HDFC Life, the other movers as well. Let's also welcome our guest for the day. Narendra Solanki joins in from Anand Rathi. Welcome and thank you so much for taking the time out for this discussion. First question to you, what are the key reasons that you have been able to identify as far as the sharp fall in the markets is concerned today, and can those reasons really lead to an extension of the correction going forward from here as well as we approach the next week, which would be the budget week as well?
Yeah, good afternoon. The market overall has been weak, not only today, but if we see when we entered this year, so since then we are witnessing a huge FII selling also, and cumulatively for the month and year to date, they are still negative. So selling is there, despite the fact that calendar year 2023, the global consensus is long emerging markets, global cyclicals and commodities. So one of the reasons from the global point of view is that since China is opening, so there might be a case wherein some portfolio shifting is happening in favor of China, and the initial funds might be getting sold off from other emerging markets and deployed in China. So one probability that could be there. Further, if you do a breakdown of FI flows into different segments, then you see then the picture emerges is that global ETF flows have been positive for India also, not only for January but for also 3 months basis. So on ETF front basis, we are not witnessing selling. The major selling then is coming from global pension funds and global sovereign funds. So those are the kind of sellings which are being seen in the context of India. Now, coming
Okay.
to the budget, I think the market is also quite nervous about the budget, what kind of announcement may happen, because this is the last budget before election year, and election also seems is also one of the top priority of this government. So, from policy perspective, the market might be looking at what kind of fiscal deficit number the budget would bring up, and what kind of policies would be there for the markets and all.
Okay, understood that. You know, the biggest talk point today, the headline makers are the Adani Group stocks. We have been seeing it's the second day in a row when we've been seeing the stocks taking a beating, especially with the kind of loss that we've seen on the market cap. It's staggering, over 1 lakh crore rupees have gone. And you know, I wanted to understand from the investors' point of view. We have seen that the Adani Group of stocks have been the biggest wealth creators for investors in 2022. Now, after this controversy, after the Hindenburg report has come about, now SEBI has also said that they are going to be increasing the scrutiny to look at the kind of deals that the Adani Group has been doing to verify any of the concerns that have been raised by Hindenburg report. What should an investor do with the Adani Group of stocks at this point in time? Is it the time to look at selling and booking profits, or is it the time to actually look at this correction as a fresh buying opportunity? Because these stocks had actually run up quite sharply. For all those investors who were feeling a fear of missing out of this kind of a move, can this actually be looked at as an opportunity to buy this dip in the Adani Group stocks?
See, first of all, we don't have any recommendation on any of the group companies for our clients, and so I would not be able to give any recommendation so far. But if you see, whenever these kind of issues occur in any company, so it is better to let the clarity emerge. And most of the issues were known to the market participants who had studied the company in past also. So nothing major new has erupted. It is just has come to the front in the public domain in a much more larger extent. However, since the issue is still ongoing and there is a lot to be uncovered, so the best advice for the investor would be to let some clarity emerge and let this issue settle out, and then only take a view based on the new information.
Right. Also about the FPO, I had one question. The Adani Enterprises FPO has been subscribed about 1%, on day one, and also the retail portion has been booked as well, about 1% or so. Let's talk about this point and, what happens to the FPO now. The current price of Adani Enterprises is slightly lower than that of the FPO. Does it change things for the investor who had been looking at an opportunity?
Yes, definitely. This outcome has definitely impacted the FPO process in terms of subscription, and this has not been, and this is clearly visible in the subscription numbers, which has not come so far. So, and now looking at the current market price, so the discount is now meaningless in the FPO, and it is as good as you subscribe to the FPO or go and buy the market. So, I think you have to see
Right.
to it like now the discount is has gone in the FPO.
Right, absolutely. Apart from this, what do you have to say about the big movers on both the upside and the downside today? Let's first ask you about, the big movers on the, downside, especially the PSU banks and the metals pack that have been seeing a substantial cut today. What does it really indicate? The kind of investors, who had been investing in this huge PSU banks rally in the last 3 months of 2022, how should they view this kind of a sharp sell-off right here? Is it an opportunity to buy, or is it a time to exit, and perhaps this could be an indication that the sweet run is now over?
See, since second half of calendar year 2022, we have seen PSU banks rallying on back of cheaper valuations. So the valuation gap has filled, and the PSU banks, while entering into the new year, were not that much attractive in terms of valuations. However, if you see the results are good, and they are continuously showing improvement in their results. So as far as valuations are concerned, valuations gap have filled, and it's a clear case of mean reversion happening right now. So investors who are into it, they can continue to remain into the long term and don't fall prey to the short term moves. It's just a mean reversion which is happening right now, while the performance on fundamental basis keeps on improving, and it is also expected to improve further.
Right, absolutely. Well, thank you so much, Mr. Solanki, for being with us and sharing your views on the markets overall on these several, pockets of discussion as well. Let's look at the closing action. We're just about 10 minutes away, 12 minutes away from the closing, and we are seeing slight recovery from the lowest point of the day as well, 59,350 at the Sensex level and 17,607 for the Nifty right now, down about 285 odd points. But definitely it is going to be a day when we will close in the red as we speak. But any recovery could be an indication that perhaps the markets may look at a pullback from these low levels as far as the next week also goes, which will be the most important trading week because the union budget will be presented in the next week too. And with that, we wrap up this edition, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Don't go anywhere, and also stay continuously engaging with us on the other social media platforms, Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in for now.
India's most credible and cutting